Our market monitor tonight says investors need to be more selective when choosing stocks in today's market. He's David Rainey, portfolio manager with the Hennessy Focus Fund. David, welcome to Nightly Business Report. I understand that your fund, you called it the Best Ideas Fund, and you've got a couple of your best of the best to tell us about. Let's start with O'Reilly Automotive, ORLY, trading at $151. Why do you like it?
We've been shareholders in O'Reilly for the last 8 years. They're superbly managed. They've had great same-store growth in this country as well as store growth. The store growth count has gone from 1,400 8 years ago to about 4,000, and it will likely reach the 6,000 unit mark in the next 5 to 7 years. Today, O'Reilly's trading about 17 times next year's cash earnings. We would expect the share price to grow in line with cash earnings for the next 5 years.
It's a crowded space, though, isn't it, David? There's Napa, there's Advance, there are a lot of them.
You know, O'Reilly's unique because it has a dual distribution model that serves both the retail and the wholesale customer. It's the only one of the big three that have found a way to do that and do that successfully over many, many years, and it's allowed it to grow in areas of the country that other firms have not been able to.
Second choice, not necessarily second in your heart, is American Tower, big cell phone company.
Right. American Tower is the large cap name, about a $38 billion market cap in here. It's a name we've actually owned in the fund for the last 15 or so years. We've seen several CEO transitions and CFO transitions. The business continues to hum on all cylinders. They're benefiting from the growth of 4G rollouts in this country, the growth of data use, and American Tower has been allocating money overseas into emerging markets. Think about Brazil, India, places in South America. We feel like their growth profile will continue for the next 5 to 10 years.
Tell us a little bit about your next pick, Encore Capital Group, ECPG, trading on the NASDAQ.
Sure. Encore is the small cap name, about a $1.1 billion market cap. It's a specialty finance company. It too has begun to expand overseas, first in Great Britain and now continental Europe. Encore buys defaulted consumer credit card debt from the credit card companies. They buy it for pennies on the dollar. They service it in-house. They service it both in the U.S. and India. And Encore today is trading just 9 times next year's cash earnings. We think it's one of the most undervalued stocks in the fund today.
David, a broader question about the market now. It was a volatile week, 5 days in a row of 100-point swings for the Dow. Should we make anything of that? Is it something to worry about? Is it just something we should get used to?
I would think over the next 6 to 9 months, as there's more talk about the Fed raising interest rates, you know, that mixes with a slowly improving job market in the U.S. So the market's kind of torn between two places, if you will. Rising interest rates are generally never good, but accelerating domestic growth is very good for the market.
All right, David, thank you so much. David Rainey with the Hennessy Focus Fund.